there's a sentiment out there to like go bigger, go bigger, go bigger. I'm personally not a fan of that sentiment these days. I think it's sort of setting you up to fail if you're truly trying to do this on your own and build your own business and don't have, a rich uncle that's giving you $10 million.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's up, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik, and with me is John Cohen. John, how you doing?
I'm doing good. How are you?
Doing pretty good. I'm super pumped. This might be the final episode we record in this room.
Yes.
The office is almost done. It looks amazing. We got furniture yesterday. Maybe. I don't know. Did Don talk to the guy today? No?
He did.
So that's a no.
Something we'll be sitting Indian style on the floor with no desks.
There we go. Shortly. We'll figure out some way to make these things work. But yeah, super excited. So hopefully we can move in there. Not that this isn't great, but it'll be nice to be in a permanent spot.
Yes, it will.
Pretty cool too. We'll probably be in Columbus again pretty soon.
Yeah.
Maybe Florida again pretty soon.
Correct.
Got some couple deals down the pipeline. So excited about that. Other than that, that's probably pretty much it, right? You got anything else going on?
No, not really. It's sort of, end of the year.
Not that those things are small by any means.
Actually, I was just talking to Don before, and I said, he's like, no, we're getting ahead of ourselves again. Way too much deals, no money, so let's figure it out. But no, it's end of the year, slows down, not much going on. And
that's what we said about end of the summer.
Exactly. Every single quarter, it's like, it's the end of this, and you got nothing going on, but we'll figure it out.
No, for sure. But I'm super excited for today's episode. We got a great guest on. Did one of our meetups with somebody else, gave a ton of great insight. I know you guys have known each other for a while. We've only started to know each other the last couple months, but it's been great. So I'm super pumped to have him on. But just going to let you introduce yourself. Josh, thanks for coming on the podcast.
Thank you. My pleasure. Good to be here. Like you said, I've known John we both started at a very similar time, maybe 7 years ago or so, 8 years ago.
Mm-hmm.
But I mean, my background, sort of a winding, weaving path. I don't want to pick up the whole podcast talking about today, but I left college working for a software company, having nothing to do with real estate whatsoever. I got a degree in business management and psychology, read a Rich Dad Poor Dad book, and knew I wanted to jump into it somehow. Work with a mentor coach to help me to get started. I ultimately purchased my first deal, a 20-unit distressed deal in Cincinnati, and went on to just build very gradually. Did about a deal a year for the next few years. I left that software company to work for a real estate investment company where I worked on both the analysis side, the acquisition side, and really absorbed as much as I possibly could to ultimately leave them a couple of years ago and start DXE formally, where this is our focus. It's just primarily value-add multifamily, although we do touch a few different spaces. We've done some retail projects and a couple condo projects, but the main focus is multifamily.
Awesome. So I know, you guys met at a multifamily event and meetup. I think it would actually be kind of interesting to hear a little bit more about, because you worked for somebody else and then you left and now you're doing your own thing. And I think a lot of it is similar between how I kind of joined Toro in a way. And I know, or at least it sounded like you did some deals on your own and then you're also working for a company. Can you kind of dive in a little bit deeper on like when you first got started, how much you did on your own, when you moved over working full time for that company? And if you want to name them, you can. I don't want to, if you don't want to. And then kind of at what point, did you continue to do deals on your own throughout the entire time? How did you, avoid any conflict of interest? When did you move? Why did you move, et cetera?
Yeah. And it's a tough balance. I mean, you probably experienced that yourself. Sure. And John, I know you were at Marcus for a while. I don't know if that was a conflict in any way, shape, or form. For me, it was when I worked for the software company, it was never really an issue and it never really detracted too much from my day-to-day work. I was able to sort of bobble things, just juggle and make it work. It's a challenge though. There's to do it responsibly. it takes a lot of time, energy, effort. My days are very full now. I don't know how I possibly did it back then. Once I left the software company to work for a real estate investment company, frankly, there was a little bit of a conflict, and it was always there and looming. And what I would say is I wouldn't really be able to do what I'm doing today if I didn't have that more formal, in the weeds experience, doing it day to day, really, really being active on that side. I don't know. This probably isn't even the answer you want. I just don't know how. I don't know how a lot of people are doing this business sort of to the extent that we're talking about doing it, and doing it part time.
Mm-hmm.
So that's an awesome. It's an interesting point, because I think we all have similar backgrounds, and I think there was a point where I was begging Josh to come work for us, but my partner had wanted no part of giving Josh what his value was, so that point. So there's a lot of people out there that pick up a book, go to a real estate seminar, then they're an accountant, they're an attorney, they are whatever they are, they do it full time, and then they want to go off and do this full time, and they think that they can. And I'm not going to say they can't, but Josh sees it now full time, making the transition, doing it full time. I have another buddy, actually, we all know him. He just moved to Charlotte. He's now going through that transition as well. And, sometimes, I get the question all the time, and I'm sure you do too, because we both have meetups that, all walks of life that show up, and people say, what is you do? I want to be you. I want to be like you. I want to do this full time. What do you do day to day? And there are some days where you probably said, if you came into the office today, you would think that it's a joke.
Yeah.
And then there's other days where you're, oh my God, there's not enough time in the day. Couple that with, Josh in the exact same situation with me, married not too long ago, kid not too long ago, and add that element in. The question I'm going to ask, I think it's interesting for the audience, since you had a kid, has anything changed from a standpoint of types of deals? Has anything, yes, things have changed. Has that changed, making these decisions or adding that element of, I don't know how you can do this while you're working full time?
I think it's a factor. The way I'll respond to it is that, maybe to your previous point, it's like, when you're starting this business, there's really not that much money that's coming out of it at the end of the day. You could rewind back 5 years, and you took the leap earlier than I did. You could probably confirm you weren't making much money in those first few years, even with some pretty big deals that were done. It just isn't working. You're reinvesting into the business. You're living off of acquisition fees as best as you possibly can, and even that you're not even realizing much of. So I could say, I think right with a kid, I guess it makes you want to be more responsible with everything. I'm less inclined to give away fees, whether it's negotiate acquisition fees or asset management fees. If I'm spending all of this time, energy, and effort, and frankly, I bring a skill set that these people that, whether they're investing or participating in some way, they don't have, I need to have that baseline compensation. I'm married. My wife does work, so there's a decent level of just good stability, but I don't know if it's because I've been doing it for a few years or it's because I have a baby now. Maybe it's a combination of the two, but that's maybe the one thing. It's not really affecting a deal profile or outlook on, anything else on that side.
You're just digging your feet in the sand a little bit more. And I do think that, I had this conversation with one of our investors the other day. He's a great investor, and he wanted to beat up the acquisition fee, and he wanted a no asset management fee. And I said, listen, do I come into your job and say, you're going to provide me with all these products and I'm going to give you half of what you normally make? And he had no answer for that, almost to the degree. Now, this guy's been investing with us for 2 years. He's like, whoa, he wasn't expecting it. And, we did a firm line this year at Toro. And I said, no more, this is what we're doing. Take it or leave it. You're either investing or not. And 95% of the investors didn't bat an eye.
Yeah.
There were some that threw their hands in the air and bitched and moaned. But I said, guys, listen, you guys have done very well for 5 years. It's now time that this is the way it's going to be. And you're right. It's not, whether it's kid, whether it's everything factored together that adds to it. And the skill set we're bringing.
Yeah. I think part of it's also just starting a business. You do whatever you have to do to create revenue to stay afloat. And then at a certain point, you're like, all right, I don't need to jump through hoops. I don't need to, negotiate everything. I've got enough leeway or room or revenue already that I know that I'll get, that I can start to draw a firmer line in the sand, or I can narrow down what I'm going to do. For example, we're not going all over the fucking Southeast and Midwest anymore.
Correct.
There's enough deal flow. We can focus in 2 areas.
Correct.
It's kind of similar in that regard. I think that's probably just any business to a certain degree as well.
I agree with that. I think out of the box, and you could speak to it as well, because your first deal was a 20-unit distress deal in Cincinnati. That turned into some good deal flow out there. Then when you made the next step to leave the software company, work for the real estate investment firm, then you got to pick and choose some deals from a more global perspective to say, hey, this deal fits, this deal doesn't, this works for this, this can go here, I can do this. And now, do you have any, the next part is now 100% on your own. Is there anything that dictates, a no-go for you? Like, hey, I don't want to be going to, Foley, Alabama, or, wherever it may be, somewhere in Missouri. Like, is there anything that says, hey, this might be the best deal in the world, but I'm not going to do it?
I think I gave away a pretty good Foley, Alabama deal, if I remember correctly.
You did.
Yeah, I think it probably ties into what you guys are doing, and I'm not even sure your focus these days in terms of markets, but we're really, really focused on, I could definitely list them on both hands, but no more than 10 cities across the Carolinas and Florida, and maybe open to Atlanta, but not really competing very well there. And that's a combination, I guess, of where we are comfortable, just getting some efficiencies, scale, same managers that we've worked with. And I guess the fact that we just think like those areas, if you're going to be paying what's a pretty low cap rate, we'd rather pay for areas that we feel are going to have higher than average growth over the next 5-10 years.
No, that makes sense. It's not unsimilar to, we wanted larger markets that are more economically stable, that you can see some runway on. It wasn't, no more Alabamas or Mississippis, or it just, those deals were good and they worked. But now it's on to the, hey, we've cut our teeth and got beat up and taken our punches. I don't want to go on a connecting flight to the middle of Alabama I don't care what the return is. It doesn't matter to me, because it's not where I want to be going forward. And there's just, the growth's not there as a Jacksonville, Florida, or a Columbus, Ohio, a Charlotte, North Carolina. But it's similar stuff. But do you think that comes more with trying some stuff out, or just being in this business for 5-10 years, seeing other successful people? Or do you think people got to, touch the fire and burn themselves?
It's probably both. I think it's both. I think that both of us said something pretty similar in terms of our focus, but neither of us are geniuses. We didn't necessarily write the book on investing. I think we're just reacting to the market around us. But at the end of the day, a lot of people are thinking that, and it's driving up prices. I mean, we just talked about what was it, a 70s deal outside of Raleigh in a good submarket for $120 a door with average rents in the 800s.
Yeah,
who is
that's
chasing
silly.
that? Yeah,
it's funny when I saw that. We high level underwriting nowadays is, what's the average rent? That's the per door, right? $800 average rent, it's going to sell for $80 a door, something like that. So that metric almost goes 100% the other way. When we're looking at deals like, we're all in at 40, the average rent 700, we're going to be able to sell that for 60, 70 a door. This was the complete opposite. It's like, okay, I have some 1031 money. I have some low hanging fruit, but this deal can't make money no matter what I do. So it's shocking, because the location's great. The assets, it is what it is, but it's fundamentally, how can you get there, and who's buying it? But it's crazy.
I mean, when you said 120 a door, I thought it would be at least $1,000 average rent, because it is a nice area of North Carolina, right?
Yeah.
I mean, that's a nice area. I figured, okay, 70s in and around that area, probably $1,000, because a similar type deal in other areas, you're probably seeing 700, 800, 900. I mean, what's the average rent in Wilmington? 900?
Yep.
So, I mean, I figured at least it'd be 1,800. I mean, that's so far off. I don't even know how that makes sense.
And even when you compared it, because you looked at it, if you, I didn't spend much time looking at it, but when you looked at the comps around it, it wasn't like you were going to get the rent to $1,500.
No. Right. There was no way.
The rents were going to $1,000, maybe. Yeah. Maybe if you wanted to push it, if you did something. So it's like, why who would rather live there as opposed to a newer build or a better location? I just didn't get it. I literally thought the broker was joking.
Yeah.
At first, I said, "Oh wow, this is going to be competitive."
Yeah.
And then I thought he was joking, but I think brokers are joking all the time now, and they're not.
The only thing you do see though is when it starts getting over that like 1,000 to 1,100, you're not getting that 1% rule anymore. It's always 120, 130 a door, just because of cap rates and expense ratios and stuff like that. So that's why I thought it was more like 1,000.
Yeah, but even this deal at $1,000 average rent, the pro forma cap rate was like 4.8. It's like, all right, this deal's never going to work. And taxes are going up in 2 years.
Yeah.
I mean, I always ask that question of like, for every deal that we win, like there's something that we're looking at that someone else isn't willing to take that leap of faith on. Like it definitely makes me scratch my head. And I guess every so often there's like some head scratchers, but generally I'm able to say, okay, they just assumed 3-4% rent growth forever, and I'm not willing to do that, or whatever it is. I mean, there's plenty of reasons why I lose out on deals, but that one's a good one. We'll see what it actually sells.
No, it's crazy because it's because you're right. A lot of the times, and I know we come from the same school of thought, more or less. Mm-hmm. We're not putting 3 and 4 and 5% rent growth in with no expense growth, right? We're not doing that. We see pro formas from guys buying deals now, like massive clip deals, like 40 million, 20 million every day launching a new deal. And they got like no expense growth, 5% rent growth, and running the deal at 95% occupancy from day one with a value add plan. Then I sit there and look at myself like, how does that work? Or better yet, where do I find his investors and let me show them my models, right? Like but that's the only way those
Nobody
deals
looks
work.
at that either.
And that's the thing.
Nobody knows how to look at it.
You were on the underwriting side, so you look at a deal and you say, "Oh wow, 4% rent growth and 1% expense growth and 96% occupancy." That's crazy. But I think the average investor, and part of the reason why we put this together, it's for the average investor, and it's for everybody. The rookie to the all-star, but. I think the people look at other people's executive summaries and their investment summaries, and they don't even know what they're looking at. Yeah. And they just go to the back page and they see a 27 IRR, or not even they see a 27% annualized return, and they're like, I'm investing.
Yeah. Josh, have you ever had anybody ask you about your assumptions, an investor looking at a deal?
Rent growth, yes.
Really?
Very little on the expense side ever.
Yeah, I don't think I've ever had anybody ask me.
It's really tough.
Except the institutional side. Yeah. But.
Yeah, it's tough. I mean, if I'm an investor that just doesn't know this world, and I know we both started this conversation all doom and gloom. We didn't really say anything positive. I mean, all of us obviously believe in it.
We wouldn't be sitting here.
Right. So I think like if I'm an investor just starting and I'm looking at like a new offering and what are like 3 things I'd look at. One would be like rent growth. So just have whoever's pitching the deal, they have to be able to justify the rent growth. If you can't comp to something and it's not new construction, you should be concerned. I think that's one. And that's like an easy one that any like dumb person could ask. I think exit cap's a big one because I could exit a deal at a 5.5 cap, you at a 6. My deal looks great. Yours looks terrible. So, trying to justify that a little bit. And then I think debt's meaningful, whether it's 80% leverage plus maybe there's additional mezz debt or pref equity or stuff like that. That's just juicing returns. It also adds a big risk factor, so understanding that is big. But you'll never get like who's going to know? Oh, trash costs of $200 a unit. That's not right for clients.
That's never going to happen.
Yeah.
All you can do as a average investor is if they have other properties in the area, ask them what it runs per door on their other one, or just look at what it operated at the year prior. Those are really the only 2 ways. Otherwise, if they don't have another property and it is the same as the last 12 months, you're just you've got to trust them at that point. There is a certain amount of trust, or actually a good level of trust that gets extended when you're a passive or active investor. So that is part of it. But I think you nailed it on the head. Those three are huge.
Have you ever bought a deal where your investors question, why is this so high? Why is that so high?
No.
I did. We had investors, why was this so high to trash out a unit?
Oh, you mean the actual
operations? Yeah, the actual operations.
Yes, definitely. And I think that's fair. I
think it's fair to question it, but then when you give them an answer and they have no experience whatsoever, that's fun too, because you're like, well, here's 5 other units that were the exact same price.
Mm-hmm.
You got to get 5 more bids. How do you know that's the right price? Like, there's not 5 guys that do this in Covington, Kentucky. It doesn't.
It's not how this works.
It doesn't work that way, but
certainly not for free.
No, it's just it's mind blowing to me that people that up front, they don't ask the right questions and they invest and then they're pissed off with whatever happens. Good, bad, or indifferent. We have an investor that we just returned a ton of money to, literally a ton of money, and now they got to pay taxes, and now they're yelling at me on why they have to pay taxes.
I think it's a challenge, and obviously, it's like you said, Chris. I think as the business keeps growing, you're going to define your own investors that you want to be working with. Also, that
correct.
I mean, at the end of the day, anyone that started with you probably invested more so in you than the deals themselves, because you didn't really have that much of a track record.
For sure.
And then, you'll probably start maybe not offering that person the deal that you're really excited about the next time, if they're really that much of a.
No, 100%. No, it's you laugh because when you start, like you said, you're doing anything you can to get a deal done. You're reinvesting in the business. You're doing all of that. And then as you've been doing this and you've taken your punches, and I know Josh has, and I know I have, we've taken some punches, good, bad, or indifferent, right? Then you say, okay, well, I'm not taking his money anymore, or I'm not buying that deal anymore. I'm not using that manager anymore, right? I mean, you've gone through it. There are managers that you've worked with that you probably won't ever work with again.
Totally. That totally. I think, but even tying it back to the investor side, if as long as there's communication, people are fine at the end of the day. I think
that's right.
Justifying every decision. To me, I've had more challenges with investors when things go well than when things are having struggles. You're much more rational when you're trying to make something succeed that's having challenges where you can only pick so many paths and you're weighing options and choosing a path.
No, you're 100% right. I say it all the time. The deals that have gone good, those guys, the amount of, let's call them problems that we've had, those investors get it or they understand it. And if they don't get it and they're a little pissed, you can explain it to them. And for the most part, you're right. It's when they go well, you don't have answers. It's like, I just gave you a 30 and now we have another investor. Just got a 36 and he doesn't want to invest in our next deal because it's showing an 18 on paper. He said, I'm getting 40s nowadays.
Well, my partner's favorite line to that is, show me that deal, I'm in.
Same thing.
Gladly.
You're getting 40s. I'll give you my money and I won't work.
Yeah.
Right.
I hear you. So with everything, obviously we were kind of talking about deals and, craziness. What types of deals are you looking at now? What do you find attractive? Things like that.
Yeah. So I'm offering on marketed deals. I think the likelihood of us winning a marketed deal is extremely low. More so, we're offering with the hope that the first and second and third guy just don't come through.
Mm-hmm.
We do have a deal in contract now in Charlotte. It's a small deal, but we were able to get it off market. Decent story, and just something that's hasn't really been invested into in the last 8-9 years. But really a cool deal. It's like walking distance to where the Panthers play and Bank of America, where everyone's hired, and just a cool urban deal where I'm excited to actually do some stuff that I don't get to traditionally do with the workforce housing type product.
For sure. What's some of that stuff that you're going to be doing?
So we're gonna do like the Amazon mailboxes, and we're going to try this out. We're gonna put Alexas in every unit.
I see that more and more now.
Yeah, and we're actually, our property manager is gonna have it tie into their maintenance software so that you can verbally open a work order. Hopefully this doesn't backfire on us.
I was about to say, that's going to be, I want to hear those recordings because fix the fucking sink. Hey, he's putting it on himself.
Yeah.
That's
that would be funny.
We pushed him a little bit for that, but I think it's unique. You don't really see that out there, and it's a deal. It's only 30 units, so there's no real like pool or exciting amenities. So we're looking to get as close as possible to some of those communities by doing like that type of stuff. We're gonna paint it bright colors and just try to make it give a splash.
That's cool. How are, like I said, a lot of people listen to these podcasts, and not just ours, there's thousands of them. They want to find, what's the secret potion or what's the magic button? And I think you touched on it, we're offering unmarketed deals. You do the best you can to get anything off market, but is it really off market? Is there anything, any piece of advice from a standpoint of, telling people, hey, listen, if I knew what the secret button was, I wouldn't tell you anyway, because then, then I'm giving away the secret. But is there anything that you're doing differently that you could advise on from a standpoint of, we're offering unmarketed deals, we're following up, something like that? What are you doing? I don't want to say differently, but what are you doing, or how are you doing it to be competitive when your offer out of the box isn't competitive or it's not going to get there?
Yeah, I don't have a great answer. I think I'm doing what a lot of people are doing. It's relationship driven. I'm just trying to, befriend brokers and be in front of them and, strike a balance between annoying and the guy that our friend Kyle likes to give a call.
Yep.
That type of stuff. I know it's like simple, but if I'm going to Charlotte, I'm grabbing a beer with 3 different brokers or a beer and coffees. I think that there's probably a lot more creativity on the smaller deal size, especially where like direct mail and calling directly, I think could be a little more effective. I don't know. You've had more success on that side than I have. It's
like anything else. I think where I think that, it's the squeaky wheel that gets the grease, right? I think that what you said is that tip. It's borderline annoying, because if you're, we have a very good friend that was borderline annoying. One of my best friends got me the best housewarming present I have. Buddy of mine that moved to Charlotte, and I'm going to tell him he borderline annoying, but he got a deal, and he got a great deal for doing it. Right? I mean, he just. But if you push that envelope as far as you can, with the same time, send them a Starbucks gift card. If you're in town, grab a beer with them. Right? There are thousands and hundreds of thousands of buyers. 10% of them are following up. And 2% of them are actually meeting in person. Most people want to sit behind a desk and buy deals. But I think, Josh traveling to markets, taking out 3, 4, 5 brokers 2, 3, 4 times a year, if not more, that's doing it different, right? Everyone says that's what to do. How many people execute on it? And I think that's why, he's getting some better deal flow or seeing some deals or just offering on more deals.
Yeah. I think what you want to be said about is like, if we were 2 brokers sat down and you're like, oh, what's John like? You want to be like, he's a great guy, but God damn it, he fucking calls me all the time.
Give him a deal.
That's exactly what you want. Like, you don't want to be annoying that people don't like you, but you want it to be like, he's awesome, but fuck, he's always there. Like, that's a good thing. You want to be always there. You want to be always present. You want to be in that person's mind all the time, but at the same time, you don't want to sour the relationship. And it's a fine line. It's not easy, and you're going to step over sometimes, and you're going to come under a little bit, but as long as you said, like, if you call somebody too much, send them a fucking gift card, and they'll be like, all
do
right,
something different.
Sorry, I was annoying. Here's, $25 Starbucks gift card or Amazon gift card or something, or, a stupid little, or bottle of wine or whatever. Yeah. You kind of figure it out and you fix it a little bit, but that's the goal you're really shooting for.
I agree.
Totally agree. So how does, it's I think we outlined like the tough parts. How does someone really get started? I'll tell you. I'll say, like, personally, what I there's a whole world of people manufacturing people to start in this business, and there's a sentiment out there to like go bigger, go bigger, go bigger. I'm personally not a fan of that sentiment these days. I think it's sort of setting you up to fail if you're truly trying to do this on your own and build your own business and don't have, a rich uncle that's giving you $10 million. But what do you tell the person that wants to be you?
So what I've been telling people today, you can't. You're not me, right? That's not a good thing or a bad thing, but if you want to be like me, I would advise you not to. I'm not that good. Who wants to be like me? But no, I tell people all the time, I agree with what you said. I truly 100% be, go bigger, go bigger, go bigger, go bigger. Buy a 500 unit, buy a 900 unit, buy a 600 unit. I tell people all the time, that space is so much more competitive. Not that the 20 to 60 unit or the 20 to 100 unit space isn't as competitive, but I do think there are things you can do differently in that world. I think that you can cold call, you can direct mail. There are other avenues to do it. And we're not in that space. Now simultaneously, I have this conversation in the office all the time saying, guys, a 400 unit deal is nice. I don't want a part of that anymore. I would love to buy 70 to 150 unit deals that are just simple, easy, clean. There's challenges, there's headaches, there's upside, but I tell people all the time, if you try and be someone, if you're not built like them, you're never going to be them.
Yeah.
That's not a bad thing. Be yourself, but do it differently. I agree with Josh. You don't have to start with a 400 unit property. Even if you have a rich uncle that has a ton of money, go for it, right? I'm not telling you not to do that, but do something different better than everyone else doing it.
Yeah.
And there are so many more 20 unit properties than there are 200 unit properties.
Mm-hmm. And go ahead. I'm sorry.
Yeah, no worries. I sometimes wish I would have started like buying a couple local stuff for myself, just by myself or maybe with my family.
Yeah, I wish I would have done that too 8 years ago.
not even from that standpoint, just from an understanding standpoint. Like, you have so many people that you talk to them about single family homes, or like you get into the nitty gritty of like construction materials. And like, I don't know. Like, I don't need to know. I don't need to know what, how to hang sheetrock or what the best sheetrock company is, or like, what's the best countertop. Like, that's not my job. That's right now, today, if I spend time learning that, it's a waste of my time, the company's time, whatever. We have people that do that. But sometimes like, I wish I would know that. So just like, whatever. And I'll ask the question as it becomes available to slowly learn it over time. But I do think there's something for taking your time, doing it yourself, being small or smaller, and just being patient and getting to that stage over time. I think, like you're saying, too many people are they do they have their own single family or a couple single families, and then they want to go right into a 20 unit, and then they want to go right into 150 unit within a year. Mm-hmm. And again, nothing wrong with that. I just think sometimes people rush to get to that stage.
Yeah, I think two things to that point. One, if you don't have a track record, the only way you're winning a deal is by paying the top price to outbid the people that actually do have a track record. Otherwise, you're not going to get picked. And then two, if you just have, I don't know what the number is, $50,000, $100,000, that's what you have. I think buy a 2-family house, live in half, rent out the other half, and it's far less risky. And it's just a good way to just build some long-term wealth if you're just getting started. I think it's a different conversation for someone that's in their 40s, 50s, 60s, looking to diversify, get involved. Maybe they want to create a second career or whatever. But I think it's a really tough leap for the 21-year-old to do this on their own. Although, Chris, I think you're pretty young.
Yes, 27, not as young. But house hacking, I seriously considered doing it. I came out of school. I went up to Massachusetts for a year, came back. So I'm 23. I probably looked at like 8 houses around Hofstra. I was going to turn the basement into 3 extra bedrooms. I was going to rent to all my friends like $500 a month. I was going to make like $200 a month. I wasn't going to have to pay rent. But then I started thinking about it, and I just realized, I am too nice. I was like, it isn't for me. I was like, I don't want the potential of rent money to become something that comes between me and my friends, or like me and people that I know. I was like, I don't want to have to deal with that. So I was like, fuck it. I'll go do something else with it. Ended up giving you 20 grand to go invest. That went pretty well, but that's how that started. But I seriously looked at it because it's a great way to start. You can go, that was one strategy because I went to Hofstra, knew the area well, knew the type of house to buy, knew what people would pay, knew I'd have people that would rent there for the next 3 years at least, if not more. But I just knew myself, and I was like, as much as this makes sense on paper, like it was the best financial decision at that point in time for where I was. But there's something to be said, and we talk about this all the time, there's more than just the financial aspect in this business for investing, because I would have been fucking miserable, God forbid something went wrong. And I think a lot of people also don't think about, God forbid something goes wrong. So it just wasn't right for me, despite it probably would have been one of the best investments I could have done at the time.
So the other thing that, and I told him for 3 years now, you should do that, you should do that, you should, because him and his friends have been looking for apartments. So I'm like, yeah, just go buy a house and rent it out. I've been trying so hard. But the other thing that I always tell people when you're starting your investment business is look forward 10 years and work backwards, right? Don't, you want to be me. Okay, you're going to have a lot of bills. You're going to have a kid that doesn't sleep that I absolutely love. You're going to have investors. You're going to have lawsuits. You're going to have paperwork. You're going to have bills. You're going to have so many problems. There's something to be said. If I gave you a little deal right now that made you 50 grand a year that you could put the right structure on and did 4 of those a year, would you have any complaints with that?
No. I mean,
I think you hesitated a little too long there.
Because it doesn't exist. But no.
Yeah.
But I tell people, what do you want to, what are your living expenses? How much does it cost you to live? Try and achieve that goal first. Try and get a deal. If your living expenses are $1,500 a month or $3,000 a month, try and get a deal that clips off $1,000, because you make life easier. Mm-hmm. The easier you make your life, the more you can focus on becoming a billionaire.
Yeah.
Or going and building that $1 trillion real estate business. But if you want to make $1 million a year and you think you're going to do it by going to buy a 400 unit property out of the box, I can't say that's a good idea. Mm-hmm. Is it a bad idea? Well, that's all relative. But I would say, try and make life simple. There's something to be said about making life simple. And I think that's what I tell people, what would make your life easy right now? Either find that investor, find that structure, or find that deal. Go find that property or business or investment and do it. That is what my advice to people that are starting is.
Yeah, I agree. I don't even know if I could have said it better.
Yeah, it's just, I think that's better than, I want to own $1 trillion company. It's like, okay, fine. That's a goal.
Yeah.
It's measurable, but you got to remember there's it's 7 trillion people or whatever billion people in the world. Like there's a lot of other people that have the exact same goal. Where I think goals differ, and being able to achieve it in today's market is try and figure out the perfect situation and find it, and don't just turn the blinders on and 6 years later you haven't found the perfect situation. You got to be flexible and you got to adapt, and that's why we own properties in Mississippi and stuff. But it fit what we were doing, and it got us to where we are today in our clear defined path. Mm-hmm. But that's the advice I tell people, because you're right. It's been doom and gloom. This is bad. These people suck. Investors are horrible. Don't raise money. No, it's not. If I didn't do what I did 7 years ago plus, or when I started doing this, and then when I met Josh, and if I didn't make that career path, I wouldn't be able to talk about it negatively or positively. So I can't say that doing what I did is wrong. I just think if I knew what I knew now, I'd have totally different structure on all my deals. I would just, I would have been a little bit more adamant on certain things. But I think that you gotta, and I after having a kid and having employees, I think you got to let people burn themselves. Mm-hmm. So I'm a firm believer of, I can tell you and advise you, but you're going to do it anyway. So now I just let them catch fire, and are you ready for me to put it out, or do you want to burn? What do you want to do?
So I have a question that's actually for you. Knowing what you know now with the structure and monies and investors, Toro's acquired or whatever, 3,500 units, give or take. Would you take less units for the better structure up front?
Yes.
Or would you still do what you did?
Tough question. Doing what I did allowed me to give the answer of yes. So it's like the same thing. I played,
of course.
I tell people all the time, my career path led me to here. If I would have known what I know today and I started this day one, who knows what I'm doing now? So the easy answer is yes. I would sacrifice deals for better structures. One, because I'm a stubborn motherfucker. And I wish I would have done that, but I
Not
think
stubborn enough, apparently.
Yeah, no, exactly. Vice versa, Josh. If you knew what you knew today, would you sacrifice deals you've done for better structures or different investors?
The problem is that my answer is similar to yours, because the second deal I did was like a tough deal in a pretty tough neighborhood that was just a constant stress, and I hated everything about it. But that second deal gave me more of a track record. It allowed me to get an investor that invested fully to do this third deal that I did, and that deal was a home run. So I don't know that I could have like avoided that to get there. You know, the whole like butterfly effect thing. Who knows?
Yep.
But yeah, I agree. I'd rather have the better structure, less deal size, all else equal. I think you just have some better flexibility.
Yep. So if you were advising, someone comes to your meetup, 18-year-old kid, 22-year-old kid, 40-year-old, woman, whatever it is, and they say, would you be opportunistic and do everything that comes your way and try and figure it out, or be more firm? What would you advise out of the box? Because I think I know what I would do.
Well, you would say be more firm, right?
Yep. I would say don't give in. Stick to your guns for a longer period of time before you just do anything.
I would say probably the opposite.
Yeah.
I would probably say the opposite as well.
You have to, that leap has to exist. Like I could even like
okay,
some
no,
of
I
your
hear
deals
you.
and my deals, like we gave away a lot. And I would give away that same a lot to now be in a place where I'm doing a deal that's just a market deal at terms we defined, and maybe it took me a full 7 years to get here and not get beaten over the head.
So no, to that point, you guys are 100% right? Like giving that up could open a door in the future that is the door you want. I'm not saying I wouldn't do it. Actually, my real answer is I'd probably try and do both. I try and finagle a way to do it, but then also try and stick to my guns. That's what I would probably do.
Yeah.
But I think that if I had, and people gave me the advice and I didn't listen to them, I think I even called Josh on one of the, I was like, this guy's willing to give me this. Should I do it? And Josh was like, well, maybe, but I don't know. And I was like, I'm doing it. Right. And the deal never happened. But, so I hear you guys 100%, but someone's got to say the other side of the coin. But no, I think that, being a little bit more stubborn, and I'm not saying go 2-3 years, but if you can figure it out, listen, we have a perfect example. It just came up. We're buying a mobile home park. And, we have 2 kids in the office that cold call every day. They found the deal. It's been 3 days. I've been asking them, what do they want? What do you want? What do you want? What do you want? What do you want? Tell me what you want and I'll back into a structure. And they know how I feel about being firm. 3 days later, they still haven't given me an answer. I got up, I slammed the door, and I walked out. I said, guys, done. If I come in here in an hour and you don't have an answer, I'm fucking done. You're not getting shit. And I slammed the door and walk out, and Don came over, a voice of reason. He's like, what happened? I'm like, I don't know. You go talk to them, because I can't physically have a conversation anymore because they're not doing what I've told them to do for 9 months. Just, if you want $1 million, tell me you want $1 million. I might only give you 10,000, but tell me what you want. And their whole fear was they didn't want to shoot themselves in the foot. If I was going to give them 100,000, they didn't want to say they wanted 50. Mm-hmm. So, but I get the fear. But I think you know this, and I think you know this, and I'm a believer in this. If you have fear going into this, you're fucked.
Yeah.
Get rid of it. And I know it's easier said than done. You have to have that fear, but that shouldn't be the reason why you do or you don't do something.
Yeah.
Because as bad as it gets, it ain't that bad, and as good as it gets, it ain't that good. Mm-hmm. You just got to be, you got to educate yourself and surround yourself with good people.
Yeah. I think going back to being firm or doing whatever, I think the reason I say go and do not whatever comes your way, but be more open to different things or different structures. I think one, who knows what the right structure is for everybody, could
Correct.
Be very different from person to person. If you are investing 50% of equity, you may not care as much about, money under a pref throughout the entire deal or asset management, because you've got 50% invested, you're making money on your money. Whereas somebody who's got no money in the deal is going to care way more about cash flow throughout the entire hold. So I think structure, and as well as too, is kind of doing a bunch of different deals. I guarantee we're well more rounded as operators.
I agree with that 1,000%.
Than we would be if we just did stable 80 unit, 6 cap deals for the last 5 years. If these Columbus deals came to our desk, which are great deals, we would have never done them because we wouldn't know necessarily how to because of all that other stuff. So I think there is this side to be said for, responsibly, spreading yourself out a little bit and being willing to do different things with the right kind of support system and safety nets and things in place.
I agree with that. I think that's fair. I mean, I think that Josh would agree as well. I think that being well-rounded makes you a better asset to your investors, to anybody else.
For sure.
But at the same time, I think that a more laser-focused, you might have been able to achieve more quicker by automatically saying, we're not doing it. It doesn't fit. It doesn't fit. It doesn't fit. You could weed through shit faster.
Oh, yeah, for sure.
Do you see, if a deal comes in, I know, we looked at a retail deal together. I have known nothing about retail. Josh told me it was a good deal. I tried. I drove investors past the property. I did. I said, fuck it, I'll do it. I'll figure it out, right? But do you think that your flexibility, because I know, it was multifamily, but then it was opportunistic, as now you own a couple of retail spaces. Do you wish, now you have a tool in your tool belt, whether you use it again is irrelevant, but do you wish that you would have taken those investors and got them into something else, or it doesn't matter either way, it works?
I think it's tough to say. I'm always chasing. I think the most important part of every deal, as silly as it may sound, it's not us, the operators. It's where you're buying the deal. Mm-hmm. If you're able to buy the deal right, that's going to cure all issues. I mean, you were a part of probably one of the better performing deals that I'll ever see. And you guys, that was one of your first deals, right?
Yep.
None of you were experts at that point.
Correct.
But you bought it right. And you went through a lot of headaches along the way to buy it right. And if I'm presented a really unique retail deal like this was, it was something that never made it to the market through an accountant in an estate situation, I would probably jump at that again if I felt like I was getting real, true underlying value day one. I think my core focus is going to be multifamily just because I think the highs and lows are more moderated and I can't handle the stresses.
No, but I think what you said was super important. I think that, and I say it all the time, when someone brings me a deal, the first thing I say, tell me the story. And don't tell me a guy bought it fucking 2 years ago and renovated 3 units and now selling at a value add. I won't even underwrite the deal. I want to know what happened, because if there's a unique story that you feel like you're getting something different, then I'm more inclined to say, okay, it's not what we do, but there's something here. And I think that's the most important part in real estate. That is definitely, the location. Yeah, okay, that's great. Buy the deal right and the location, and you're going to win. If you buy a good piece of dirt for the right price, that's basically a win 100% of the time. Yep. So I think that's the ultimate, you brought it up. I think that's the underlying thing in the whole thing. You could underwrite whatever you want. You can you could project demographics and read economic reports. It's all bullshit. Buy a piece of real estate right in the right place and you win, in my opinion.
It's the acquisitions mindset, which is it's tough to give that advice to someone that's like a first-time investor, let's just focus on the story. But it's, when you have your acquisitions hat on, I think that's what you're chasing.
Yep, I agree.
I think it's tough, too. You've got to learn how to weed through the bullshit stories, because there's a fuck ton of those.
Well, everybody lies. Yeah. Everybody. If you're listening to this podcast, Josh can attest to it, so can you. Whatever story they're telling you, they're not telling you the truth. They are lying for sure. Just figure out where they're lying. Yeah. And you'll automatically be better off just assuming the person talking to you is not telling you the truth.
No, there's definitely some interesting stories we found out.
The amount of deals that we get sent that are literally broker blasted deals. Some guy sends it with a 4% buy fee on it is shocking to me.
You know what I got recently that was pretty funny? I got a deal sent to me, 112 units in St. Petersburg or Tampa, $1.1 million. I was like, but went online, advertised deal, nice deal. I sent back, I was like, I think there's a typo in the price. Let me know what it is. Sends it back. He goes, no, the price is right. It's only 12 units. And I wrote back, I was like, my guy, I think you're wrong. Check out this listing. It's 112 units. This is exactly what you sent me. He was like, oh, let me go find out. But it was the same thing. It was an email with a price, asking and need proof of funds. And I was like, this is mind blowing. I mean, no story, but I was like, the amount of shit that's being slung around today is mind boggling.
Nuts. What's new and exciting for you? What are you got your Charlotte deal. What are you doing another meetup event?
I'm excited about next October. I'm doing a joint event with my financial advisor. He's going to invite 20 of his clients, and I'm going to invite 20 of my existing investors just to we'll have a room, just drinks, dinner, and we'll each speak for like 20-30 minutes and just it be a networking thing. But it's really targeted, so I'm excited to do that because it's previously I've cast a pretty wide net with some of those events, and it's sometimes it could be frustrating, but I think that'll be good.
That's an interesting concept.
It is. It's things like I think that that's another thing. Right? If you're trying to get started in this business, do something different, right? Yeah. That event is different. If you have good relationships in that space, you bringing value to the table is going to pay you in the end, in some way, shape, or form. Mm-hmm. And I think that's the important stuff. That's where the money's made is by providing value, and I think Josh does a good job of that. I mean, I know, like you said, you're an asset. Josh is an asset to his investors because he's seen it from the early stages of being an underwriter and acquisitions and going through the whole process. Like he's got more experience than most, and he's seen all the sides. He's bought deals, he's sold deals, he's executed on deals. The only thing that he hasn't done, and I tell people all the time, is we both started at a similar time, so we haven't seen the real shitty times.
Yeah, downturn, recession.
But other than that,
I don't even know what that is.
Exactly.
Yeah, that's
the last time the world was ending, I was probably 25 years deep in college. Completely oblivious to the world, and parents can't pay bills. I'm hammered, laying on a roof.
That's good. That's what people want to hear. That's what they signed up for.
Listen. It's the truth. Someone looks at me and think I'm professional. You got to realize that I was in college also.
Yeah.
And I didn't go to school. I played baseball. So that's even worse.
Student athlete. Awesome. Josh, where can people get in touch with you, find out more about you?
Website, DXE Properties. We have a newsletter. Feel free to sign up there. We try to do a monthly informational blast of some sort. And I'm always happy to just connect with new people and be a resource.
Josh is one of my best friends in this business, if not, the closest to me as far as age, where we are in life, whole 9 yards. I recommend you at the end of all, we're not having people on the show. I say it all the time that I don't really trust. We will at some point, but early on,
and we'll be sure to let you know as soon as they get done speaking.
That's without a doubt. This guy's an asshole. No, I can honestly, Josh, he's going to give you the time. He's not selling anything. He's got great deals. He does it a little different. Good. Go to his website, check him out, give him a call, send him an email. He'll definitely reach out to you. Other than that, I mean, thank you for coming on.
No, thanks for having me. I'm looking forward to listening to some of these. I think
they're getting launched soon. We're excited. We actually we're wrapping up editing. It's getting close. We have a couple more to film. And then we'll see what happens.
Are you doing the video too, or is it only voice?
Oh, it's going to be everything.
Videos too. Oh, you guys have to get
like some activities today.
Going on there. Yeah.
Yeah. No, we went whole 9 yards. Exactly. There we go. It's boxers, and he's sitting at home.
Yeah.
No, we're excited. It's going to be it should be good. We'll see what happens. We're like everybody else, but I think we're going to be
a little different.
It's going to be different.
We'll see.
Yeah. I like it.
Awesome. Thanks, bud.
All right. Talk to you guys soon.
Later, brother.